Living a dream. This is GoldFX. So here today I want to share a little bit how I trade gold, spot gold, and obviously the inspiration was through possibly trying to take a challenge account to become a FTMO prop trader and working through the verification right now. Just passed it on this Friday, or today Friday, as I'm doing this. So with that being said, just I shed some light on gold. I do like this pair in a sense where sometimes, like especially since I'm in the US, the Asian session is kind of my primary session that I trade. And gold, compared to other pairs, tend to move a lot more than most. So if we look at it here, this is right about 6 p.m. That's when we start at my time. And then we're into right here, and now it goes to 2 a.m. So throughout this whole entire day, there's definitely a lot of movement, especially on the 1 minute chart, right? Compared to other pairs. Just take my word for it. If you want to go ahead, look at GJ, GU, all those pound pairs that typically, their ATR is massive. Gold is also a good alternative. I would recommend it. However, this pair is definitely a beast of a kind. If you don't properly manage your risk, you're going to get shot in the foot. And I've shot myself in the foot majorly to the point where I almost have, heart attacks and panic attacks and all that stuff. So I don't just take my word for it. You do not want to go too crazy on gold, and just really stick to your rules and make sure you follow FTMO like a religion. That you cannot do that. So knowing your risk at all times. And I know some people talk about risk 1% per trade. That's a definitely good alternative, because the way gold is that it's so expensive that it's a 1-to-1 ratio. So for example, typically gold is right around for purple trading. The average spread for gold is it's about like 13 points, but typically the price can go 600 to 300 points. So if you risk one lot size, which is 100k, that will be 6k, just like that. Or if it goes to 1,000 pips, then you get 1,000 times whatever lot size you use. So if it's 1 times 1,000, that's 100. That's 10,000. That's your profit. So, anyways, that's why I choose gold, and I want to perfect it. And it's an ongoing thing that I would love to have you guys on my journey with, and especially shout out to those subscribers right now. Next video, I'll make sure I do a shout out and call you out. Appreciate it. I'm not the best, but I'm here to be with you, and shoot me any messages and whatnot via YouTube right now. That's all social media I have right now. But let me know in the comments below. Like, subscribe, share this. We'll keep going from there. So maybe we'll start something like a Telegram chat group or whatnot. And just strictly, I'm focusing in on gold. I know I want to deviate to GJ and GU, which are my two bread and butter, I would say. And those I've been looking over for like 2 years straight, and I've just fallen in love with those two pairs. So just how they move and how they challenge you and how they make you really think. And gold moves in a similar way, but at the same time it doesn't too. So it's just like, how do you apply all that? So now that I got all that out of the way, let's go and dive in. So with that being said, here we're looking at the EMAs and looking at the big majors. So I'm doing 7, 13, 21, 55, 100, and 800. So just the typical ones that everybody's using out there. Now, one thing I noticed about gold is that gold likes to whipsaw a lot, in the sense where it'll shoot up super high within just a minute, and it will just retrace right back down. So I think with gold, you really have to be patient and don't jump the gun, and you really have to assess how the price action and how it's doing and how it's reacting towards the EMA, and also how it's retesting. Is it setting a higher high or higher low, for example? So we zoom in here. So let's utilize. Let's actually go ahead and where's my replay button now? Excuse me. Give me a sec here. I think I'm just blind, but we'll replay from here. So beginning of the day, right? So this is what we do. That's what we do. How do we draw the charts? Well, with me, I initially would just first, I tend to want to give it time to really show itself, reflect itself as if price is going to break the upside, or the the bottom side. So this is play forward, real time. Let's just take the speed down. We'll forward it. So we're seeing the 1 minute chart. Okay, broke that high. Typically, when it breaks this high, I would have wanted to trade the upside, set the stop loss to here, but we'll just keep going. This is forward. And the idea is it going to retest this high, or is price going to fail to retest and set a higher low, in a sense where this is the higher high, higher high, higher high, did not reach that, so now this potentially is a higher low. Here we go. Alright, so broke that. We're getting some nice wicks, and wicks are key areas where price is telling you no, we're going to push pressure from the sellers. So with that, I think we're kind of looking at okay, price is really rejecting it at the 1563 level. So that's something to watch, right? Forward. It's coming down. So that we can definitely sell here. Set the stop loss to 1563. Oop, I'm playing it now. Let's forward it. Okay. Just keep watching the price action. You see how it whips all like that? You gotta watch out. Gold is kind of crazy. That's why you want to make sure you manage your sizes. And you don't really have to set the stop to here, or at this point. Maybe you can set a reasonable stop to 1563.50. Now with gold, what I do sometimes too is I try to size up extra once I feel very comfortable where at my level, and I just take a quick in and out, 10 to 15 pips, and call it good. So here we go. We're getting a push to the downside. We'll see if it retests the open. Close to the open. Nope, it rejected it. Price is coming back up. We'll see what price does. Keep going, keep going. Should I put the speed faster? Going. Hit that. Rejected. Going again. And then that's how it goes. It just hits and it just goes. And it's real quick. And some of these candles are huge, ginormous candles, just like that. You saw how it went down and then basically pushed right back up. And like that, it broke the high. And now I would have just, possibly got stopped out. And that's something that you got to really watch out for gold when it comes to these kind of things. Looking at the price action, I probably wouldn't even have realized that, because I was thinking about, is it going to push lower? Is it going to push lower? But then if we really think about it, here we see the wicks. Those are always key indicators. You can always see these post the call, the call of the trade. But during the trade, sometimes you become so focused in on the price that you forget to see the wicks. So that's something that you definitely have to check out. Is that keep your eyes on the wicks. So let's keep going here, and it whipsawed again. So those are things that you have to be mindful of when you're trading gold. And I trade on the lower time frames because I'm just trying to be in and out. However, that can work against me when the price is really whipsawing, and that's why I try to just really stick on to. I'll just show you a perfect setup of how we'll just keep this going. Just kind of fast forward this. Let's just let it go. Let's let it run. Okay, so we pause there. So typically when it's how I would have traded is, I would really look for the break of this. What's going to do? I may have, once it broke here, I may have has sold, but let's see here. Let's get rid of this guy here. going, and those are things that we gotta really watch out for. And I would have, put a sell here, and you could possibly put obviously a stop loss, but that's a huge stop loss if you're just gonna go here and purchase a 1-on-1 ratio. But you can see it retested this level of the previous, and then it failed to go. But then when you see the EMA, they're crossing, right? They're retesting. Now I think this is the 200 now has become the support, and we're getting again. Have to be mindful. It's kind of hard to see, but the wicks, right? Wicks, lower low. Sorry, not low. It's a lower high. So we go here, lower high, retest, fail right away, right? Lower high, lower high, lower high, lower low, lower low, lower high. And it's pretty practical in that kind of way where if you already seen it, it's kind of falling, and you can go. I don't think I can switch the time frames. It's just not gonna lock up in my stretch. But in a higher time frames, it's the same concept. You're just seeing it in a minuscule minute by minute level of how the price is reacting up and down, whether it's bearish or bullish per trade. And we'll just kind of go from there. Slow it down a little bit. Actually, make it faster. So go there. Look at the EMAs. Keep in mind. Also keep in mind the 800 EMA here. Okay. Trying to look for some. Typically down here, you like to look for some head and shoulder patterns where they're faking to the downside. A shoulder here, a shoulder here. Even in the lower time frames, you get that type of price action that can really help you identify where we potentially could go. So to me, that's the first shoulder. First shoulder. That's the head, right? So the head and the shoulder, and we're trying to get another shoulder to the upside. So let's play that. So that's the shoulder right there. So this is the shoulder that I'm talking about. And then we see how price is going to do to the upside and how it plays out. Okay. So now it's riding on the 800 now. So broke below the 800. EMAs are, coming together. They're stretching out. They're consolidating again, break out. So those are things that I think that are key. Is that let the price consolidate like really really tight, and then wait for the breakout. It's gonna give you a nice breakout for gold. If you don't want to trade every little bit, just wait until the EMAs consolidate, or just basically stay very compact, and then you can take the trade there. So other than that, I think that's pretty much it that I want to show. But let's see how price goes, right? My head and shoulder pattern. So it seems it is coming down. So at the same time, this could possibly also on that end, just to wrap this up, shoulder, head, shoulder to the downside, or to make it prettier, downside. And I'm just scalping, so I'm just looking for really. You do want to hit the home runs, to be honest, because otherwise you're not gonna really make much, because depending on your stops, because sometimes these